The housing market bubble may finally be bursting. So could this be what brings affordable housing? Before we dive into that, let's talk about what affordable housing actually means. When someone says they want affordable housing, what most people actually mean is, I want housing to be affordable for me without my own home becoming less valuable. And that one sentence explains why the housing market has been so broken for so long. Because for renters, housing is a bill. For first-time buyers, housing is a wall. For homeowners, housing is often their biggest asset. So when politicians say, we need to make homes affordable, the next question should be, affordable for who and expensive for who? Because you cannot have a market where homes are cheap for buyers, expensive for sellers, profitable for investors, painless for homeowners, and easy for politicians all at the same time. Somebody has to give. And right now, for the first time in a long time, it looks like the housing market may finally be reaching that point. Home prices are no longer moving in only one direction. In May 2026, Realtor.com reported that national median list prices were down 2.4% year over year, the seventh straight month of annual declines. That is not a crash, but it is a break from the story people got used to hearing, buy now because it only gets worse later. And that raises the real question of this video. What if fixing housing affordability feels, at least at first, like breaking the housing market? For decades, governments tried to solve expensive housing without making housing cheaper. That sounds ridiculous, but it is basically what happened. Instead of asking, how do we create enough homes so prices stop outrunning incomes, the system kept asking, how do we help buyers afford prices that are already too high? So, we stretched the loan, lowered the down payment, created first-time buyer programs, offered credits, encouraged co-signers, let families borrow from the future to compete in the present. And again, for one household, that can be helpful. If a program gets you into a safe, stable home, that matters. But at the market level, it can become a trap. If there are 10 families bidding on one house and all 10 families get more buying power, the house does not become more affordable. The auction just gets more aggressive. That is the part people hate admitting. A lot of affordability policy did not lower the cost of housing. It helped people chase the cost of housing. The actual shortage did not disappear. Freddie Mac estimated the U.S. housing shortage at 3.7 million units as of the third quarter of 2024. That shortage is not evenly spread across every city, but it explains why so many people feel like a normal home near a normal job has become a luxury product. When you do not have enough homes where people need to live, every extra dollar of financing becomes gasoline. And for years, the system kept pouring gasoline on the fire and calling it help. Now the conversation is changing. The new housing debate is not just about helping buyers borrow more, it is about making it easier to build more. That is why the recent 21st Century Road to Housing Act matters. It passed with huge bipartisan margins, 85-5 in the Senate and 358-32 in the House. And it includes provisions aimed at supply, manufactured housing, zoning reform, homeownership access, and institutional investors. One part pushes HUD to publish best practices for zoning and land use reform. Another creates incentives for local governments that increase housing supply through things like faster permitting, density bonuses, and zoning changes. Another makes manufactured homes easier to produce by removing the permanent chassis requirement. Another restricts large institutional investors that already own at least 350 single-family homes from buying more, with some exceptions. None of that magically fixes housing tomorrow. You do not pass a law and wake up with a starter home on every block. The direction matters. For years, the system mostly tried to help people pay more for scarce housing. Now, at least on paper, it is trying to make housing less scarce. And that is where the conflict starts. Because scarcity is painful for renters, but it can be profitable for owners. If you bought a house 10 years ago and it doubled in value, that increase did not come from nowhere. Part of it came from wages, part of it came from low interest rates, part of it came from demand. But part of it came from the fact that the next person had fewer affordable options. That does not make homeowners villains. Most homeowners are not sitting around plotting against first-time buyers. They are just trying to protect the biggest financial decision they ever made. But the market has created a situation where affordability for one group can feel like a loss for another. That is why fixing housing is so politically difficult. The medicine is more supply. but the side effect is that some asset prices may stop rising or even fall. And now we need to be honest about what that means. Falling home prices are not automatically good or bad. They are a symptom. The cause matters. If prices fall because people are losing jobs, credit is freezing, cities are shrinking, and buyers are disappearing, that is not affordability. That is distress. But if prices fall because buyers have options, sellers have to compete, new homes are being added, and renters can negotiate again, that is a healthier market doing what it is supposed to do. A grocery store having more food on the shelves is not a crisis because apples get cheaper. A housing market having more homes should not automatically be treated as a national emergency because buyers get leverage. The problem is that housing is not apples. Housing is where people live, but it is also where a huge amount of household wealth is stored. So when prices soften, the pain is uneven. The most vulnerable homeowners are usually not the people who bought 20 years ago. They are the people who bought recently. Imagine buying a home at a high price with a high mortgage rate and a small down payment. You finally get in. Then, prices fall 10%. You might still be able to make the payment. You cannot easily sell. You cannot easily refinance unless rates cooperate. The home that was supposed to make you feel secure can start to feel like a financial cage. That is the harshest part of a housing reset. The people who wanted affordability the most can get hurt if they bought right before affordability finally arrived. There is another issue that makes the current moment different. Owning a home is not just about the purchase price anymore. It is the mortgage rates, property rates, maintenance, and insurance. In Florida, the average annual cost of home insurance hit $8,292 in 2025, up 18% from the year before, according to Insurify. That is not a minor expense. That can decide whether someone qualifies for a mortgage at all. A house can look affordable on Zillow and still be impossible to own once the real monthly cost shows up. This is why the next version of housing affordability has to be broader than lower the sale price. We need homes people can buy, rent, insure, maintain, and actually live in without turning every month into a financial stress test. That means more starter homes. This means more townhomes, more duplexes, more affordable apartments in cities near jobs, just more homes. We need more senior housing so older people can downsize without leaving their community. And yes, more market rate housing too, because when higher income renters have nowhere to go, they compete for the same older units everyone else needs. The answer is not one kind of housing. The answer is enough different kinds of housing that people are not all fighting over the same limited inventory. But policy has to be careful. If governments respond to falling prices by bailing out every developer, protecting every investor, and restarting every demand-side subsidy, then we are right back where we started. The goal should be to protect people, not prices. Help families avoid unnecessary foreclosure. Help renters access stable housing. Help cities build faster. Help first-time buyers without turning every subsidy into a bidding war coupon. But do not guarantee that every housing investment must always win. That promise is how we got here. A healthy housing market should not require desperation from the next buyer to validate the last buyer's decision. It should not require renters to spend half their income so owners can feel wealthy. It should not require young families to move 2 hours away from work just to find a house with enough bedrooms. And it should not treat every new apartment like a threat to civilization. So here's the uncomfortable truth. If housing affordability actually improves, some people will not like how it feels. Sellers may have to cut prices. Landlords may have to compete for tenants. Developers may have to build what people can afford, not just what investors will pre-order. Homeowners may have to accept slower appreciation. Cities may have to allow change. That is not the market breaking. That is the shortage losing power. And the shortage needs to lose power. Because a society where housing only works for people who bought early is not stable. It creates resentment. It delays families. It pushes workers away from opportunity. It turns normal milestones into luxury achievements. And eventually, it forces the exact political backlash we are starting to see now. So the question is not whether housing should become affordable. Almost everyone will say yes to that. The real question is whether we are willing to accept what affordability requires. More building, less speculation, slower price growth, more local change. And in some places, lower prices. That is the part nobody wanted to say out loud for years. But there is no magic version of affordability where buyers pay less, sellers receive more, investors keep winning, neighborhoods never change, and politicians make everyone happy. That version does not exist. The old housing playbook was simple: protect prices, stretch buyers, restrict supply, and hope incomes somehow catch up. They did not. Now the market is being forced into a new playbook, and the transition will be messy. Fixing the housing market may feel like breaking it because the broken version made a lot of people rich. But if the goal is shelter, stability, and a fair chance for the next generation, then prices cannot be sacred forever. Homes need to be places to live before they are assets to trade. And if that idea feels radical, it is only because the housing market has been backwards for a very long time. So when you hear that home prices are falling, do not just ask, is that good or bad? What you should be asking is, falling because of what? Falling for who? And falling toward what kind of future? If prices fall because we finally built enough homes, gave buyers options, and stopped treating scarcity as a business model, then maybe that is not the housing market breaking. Maybe that is the first sign it is starting to work. If you found this helpful, subscribe for more breakdowns on money, housing, and the policies that shape everyday life. And comment below with what you think would make housing more affordable where you live. More apartments, faster permits, smaller homes, fewer investors, lower rates, or something else entirely. Thank you for watching.